look at what's happening here. 104,000 on shorts. What's the all-time maximum on shorts? 105,000. So what do you think the odds are going forward? How's it going, fellow traders? Magic Trader here, and this is your latest CFTC data that was reported on September 24th, 2024. Welcome back, welcome back. Nice to have you. Here is a snapshot of the positions held by the largest institutions in the world of all the major currencies: gold, silver, copper, oil, S&P 500, NASDAQ, Dow Jones, and bonds. These are some of the major markets that we trade here at White Oak Capital. And we are looking usually at the change column when we look at this snapshot here. Why is that? Well, because it gives us a brief look at the difference between the past positions that just came out and the previous week's positions, okay? So we can see what was the latest shift over the last week. What did the institutions recently do? And so if we look at the change column, we can see 65,000 for the Aussie US dollar. Positive move, okay? Positive move of 65,000 for the Aussie dollar. We can also see that the pound US dollar made a positive move of 48,000. If we take a look down here at the S&P 500, that is massive. Look at that. A positive move of 184,000. Haven't we been saying the market is bullish? We've been laying all this out to you for several weeks now. Actually, for a few months to our members. But we've been pointing this out for several weeks now in the public. And even bonds. Remember we told you bonds contacted a massive supply zone? And so we should expect some selling of long positions. Okay. And what does that translate into? A minus 85,000. Okay. A minus 85,000 change. So we've been nailing it. The portfolio is up like 35% right now for the year and growing. And we're doing extremely well. So many new people are signing up to White Oak University. It's unbelievable. You guys are finally starting to see it. The word is getting out there. We're getting more and more views each and every day, and we couldn't be happier. So let's start by taking a look at gold, as we always like to do. So gold, what's the first thing that we always notice with gold? Is long positions. We've been focusing on that for quite some time. Why is that? Because they're starting to get near maximum size. What is maximum size? Maximum size is 408,000. What does that mean? Well, that means historically, the largest long position the banks have ever held in gold is 408,000. We're now at 387,000. You know what this means? We are very likely going to see them start taking profits on those long positions. And guess what that's going to do? That's going to fuel a move to the downside. When is that going to begin? We couldn't tell you because we don't have a crystal ball. But I could tell you, based on historical price action and positioning, we are more likely than not going to be getting a drop in price coming very soon. Okay? So be watchful of that because we think it's going to be coming pretty soon. All right, so let's go on to oil. What do we see with oil? Look at the long column, blue. Look at the short column, blue. Not much going on here. When you have longs and shorts and the columns are blue, that means the institutions are very cooled off with both sides of their positions. When we look at the long and short columns here, what else do we see? We see, what color are they? Blue. That means neutral. The banks are neutral, all right, with their positioning. I don't want to get into an asset with my money if the banks are neutral. I want them to be committed to either bullish or bearishness before I put my money in. So right now on oil, we're not seeing any of that. So we move forward. US dollar, what do we see? You remember a couple of weeks back, we had contracts expiring, okay? And I was talking about the importance of watching what happens when contracts expire. Why is that, you might ask? Well, because usually when contracts expire, we see a shift in positions, okay? Remember, they have to exit out of old contracts and get into new ones. So if they had 32,000 long contracts, they have to exit out of 32,000 long contracts. And if they want to continue to hold a strong position in longs, they have to open up 32,000 long contracts in the new contract. But if they don't do that, which they didn't here, they opened up only half of those positions. So what does that tell you? They use contract expirations to make a major shift in their positioning. I think it's an important shift that they made. 32,000 down to 15,000, that's more than half, okay? So what are we looking at here? Why would they do that? Well, it could signal a move to the downside, because if we look at the coloration of the cells here, what do we see? It's turning red. From a little bit of neutral, a little bit of bullishness, a little bit left, right, and center here, and then boom, bearishness, okay? And we're making a move down. Where is demand? Demand is further down in the chart. This does look like price is going to be heading lower. Short term, I see momentum to the upside, but longer term, we see momentum to the downside. All right, let's look at the Aussie US dollar. What do we see? They, back in September 17, they reduced positions down to 53. But here's the thing. When they're in the process of exiting old positions and opening up new positions in the new contracts, they could be in the middle of reporting those positions when this happens. So when they reported 53,000 on September 17, that's only because they were in the process of opening up more positions and they just haven't reached the 81,000. So right now we're seeing 74,000, a drop to 53, but now it's going up even higher, meaning what they were doing were trying to increase their long positions, and this is what we're at right now, being at 81,000, okay? Big number, okay? Bigger than the 74, that's for sure. So they are focusing on increasing their long positions at this point. All right, let's pay attention though. Long and short columns here. We've seen a little bit of bearishness, more neutral over the last several months. So right now they're more neutral. Let's be a little bit cautious with that. Over a longer period of time, I see price heading up even higher. USCAD. Look at this one. Let's look at the long column. They recently took profits on long positions. Who could have seen that one coming? Well, we did, and we told you about that, okay? So they offloaded long positions at the highs, which caused the move to the downside. Right now, shorts are not being focused on. If you look at the short column, it's very neutral, very blue, meaning they're not really focusing on shorts. But we are starting to see evidence to suggest that the dollar over the longer period of time is going to be dropping. Short term, we see a move to the upside. So does this mean that we might be seeing a move to the upside here only for them to start piling into more shorts? That is a big possibility, and that's something that we're going to be watching in the weeks and months to come. Another interesting thing is look at net positions, okay? They went from super aggressive plus 196,000, and now they've been dwindling ever since. So we're going to watch to see if that shift does indeed take place going forward. US dollar Swiss. Look at the long column. They've been reducing them since the highs of 56,000. Look at the short column. All blue, neutral. So we're starting to see that there's this common theme here amongst the dollar pairs. Especially when you look at the USCAD, you can see it's the same dynamic that's taking place. On the weekly chart, we have some basing, and then a momentum candle was produced to the downside. Did that momentum candle close below the wick of the basing? No, it didn't. And if it did, it would have signaled a move to the downside, but that didn't happen. But then again, think about it. Short-term move to the upside, right, for dollar pairs, and then longer-term move to the downside. So we're going to be watching for that. What I can show you is that, look at this bullishness becoming more neutral. Is this about to shift into bearishness? Very, very high odds that it does that. So let's continue to watch that as it unfolds. Euro US dollar. Look at long positions, okay? They went from 218 down to 187. They're taking profits on long positions up at these highs. All right. So if the dollar short-term moved to the upside, what do you think what would happen with the euro? Yeah, that's right. Likely a short-term move to the downside. Overall, I think there's a good chance that we see a move to the upside over the longer term. We have major supply here, so yes, it's hard to tell exactly when this move is going to happen because supply is in play. We don't know how much more selling is going to be coming into the market, but we do see this creeping up even higher and eventually breaking through that supply. So let's continue to monitor that as things progress, and we'll see if Indeed, we see them reaccumulate their long positions again. Pound US dollar. All right, it's time for a drop, folks. They recently, back in July, went up to 188,000. They took profits. And then they went up to 160,000, and then they took some profits. And now we're back up again, contacting an institutional area of supply. And we're at 155,000. Interesting how each rally became less and less aggressive with longs. Looking for a move to the downside is definitely what I see coming, okay? Is it going to make a move all the way down to here? Who knows? Who knows? But nonetheless, short-term, potentially medium-term move to the downside is what we suspect will take place. US dollar, Japanese yen. You remember we told you they were going to take profits? Told you so, told you so. Nobody loves an I told you so. But when it comes to the markets and the work that we do, I told you so is signaling to you that the logic we applied to doing the analysis was dead on. Dead on. We told you that they were maxed out or reaching maxed out positions on longs, and that was going to fuel a move to the downside when they took profits, and that's exactly what took place. And now, look at what's happening here. 104,000 on shorts. What's the all-time maximum on shorts? 105,000. So what do you think the odds are going forward? A move to the upside. That's right. That is what the odds are. Do we have a crystal ball? Can we tell you exactly what's going to happen? No, but you look at the data, it tells you a story, you apply the right logic, and it should be correct. Let's look at Kiwi. Kiwi. They're increasing longs from 20 to 26,000. Not much going on there. And shorts have been steadily increasing, but nothing amazing, I would say. Another thing that I should point out to you is take a look at the recent coloration of the cells here. Neutral, that means the banks aren't really focused on either direction. They were previously focused more to the downside, but now they are more neutral. So nothing very strong here on the Kiwi. So we're going to leave this one alone. All right, ladies and gents, that is basically it. That is the major currencies, gold and oil, that I want to share with you. If you want to learn more, if you want to bring your trading to that next level, we'd love to have you at White Oak University. Come to our website, whiteoakfx.com. Take a look around, sign up, become a student, or even just a basic member if you want to just dip your toe inside and see what we're doing. We're doing extremely well. A lot of our followers are learning great things from what we're doing, learning how to actually locate supply and demand, banks buying and selling. You know, those banks that are actually controlling the markets, it's important to know what they're doing. Come by, learn a little bit, and jump in. We'd love to have you. You take care. Thanks for joining. Bye-bye.